That's right, you're watching Traders Corner with myself, Bronwyn Seaborn, and of course Garth McKenzie, editor and founder of Traders Corner. And on this week's episode, we're taking a look back at some of the highlights of 2018. Garth, thanks so much for your time today.
Thanks. Hi, Bronwyn.
So remind us of the starting values of the portfolios, and then where did we end up at the end of the year?
Yeah, so we start the beginning of the year with two portfolios. In the South African portfolio, we had 150,000 Rand, and offshore we had 15,000 US dollars. So in Rand terms, with the exchange rate as it was at the beginning of the year, that worked out to 334,000 Rand in total capital that we essentially started trading the year with. And of course, the intention is then to trade each week and look at opportunities and trade them based on the proper trading principles that we always trying to teach people on this show. Yeah. So in the end, we grew that capital quite nicely. We ended with a 27% return on the South African part of the portfolio, 11% return in US dollars. And when you combine that all back into Rands, as at the end of the year, we've got just shy of 420,000 Rand, which means that we've made 25% return on our trading portfolios this year in Rand terms, for a total profit of 85,000 Rand, which goes towards charity. So it's been an excellent year in what has otherwise been a really awful year for the JSE. I mean, I think it's been the toughest year of my career in terms of looking at broader market and just general activity and the lack of interest and the mood and everything. It's been a horrible year, 2018. But I'm very pleased to say that we've actually managed to still dominate and come out with a super performance this year. Yeah,
so a really stellar performance. But what we're going to do now is we're going to try and squeeze as much as we can into the rest of the show and look at 7 trades from the past year. So let's start off with one of the winners, which was Amazon.
Yeah, so Amazon.com has been one of the big winners of the year, although it's come off the boil a lot in the final 2 months of this year. But certainly throughout the middle part of this year, it was a very strong performing stock. Now, we identified an opportunity in the beginning of June here, where we saw the stock breaking above overhead resistance here at $1,600 per share. And at that stage, I thought it looked like it was going to move higher. We went long of 5 CFDs. Now, 5 doesn't sound like a lot, but remember, these things are $1,600 each. So it's still a meaningful position size. We went long at $1,616 per share with the stop loss at 1,575. And we saw it move up quite quickly, and I took a profit there fairly quickly. We sold out at $1,705, and we made $432, which was a decent return on our offshore capital. But I think if I have to take a lesson out of it, looking back, and it's always important to do this, review your trades. Every couple of months, go back and review your trades and see if you could have done better. And in this case, we certainly could have done better. You can see that stock continued to trend upwards in a very nice linear fashion. And it actually went to just above $2,000 per share before it all came tumbling down during October. But, had we ridden more of that trend, we probably could have made a lot more profit out of it. So perhaps a little bit hasty to get out of the trade here. But nevertheless, it was a profit, and we're happy to chalk up profits. But I think there's a lesson that we could have probably made more if we were more patient, let's say.
So maybe a little bit of a missed opportunity for Amazon, but one of the trades that you really took advantage of was ShopRite, right?
Yes, so ShopRite, we actually traded twice during the year, and we'll revisit it again. We've got a winner here, and then we've got a losing position in ShopRite as well. Now, this one was in the middle of the year, in June. These kind of opportunities come along every now and again. And what happened here was there was a book build where 17 million shares of ShopRite were placed in an overnight accelerated book build. And what that is essentially a large block of stock that comes to the market, needs to be sold in a hurry. It gets placed with various institutions and hedge funds and pension funds and what have you overnight. But because there's a large block of shares that need to be sold out, it's typically done at a fairly deep discount to the prevailing market price. And what you find is the share price usually gaps down, but then it recovers very, very quickly because nothing's really changed fundamentally in the business. It's just that there's a short-term oversupply of shares. So when you see these kind of opportunities, they often are quite nice to trade if you're quick and on the ball. And we managed to capitalize on this one. We went long with 380 CFDs at 211 Rand with a stop loss below 205. And we were simply looking for the market to move up and fill that gap that was created by the book build. And within a couple of days, it got there, it closed the gap. So we sold out at 224 Rand per share, and we locked in a nice profit of 4,484 Rand there. So textbook trade in terms of how you trade these book build situations.
Still on our winning streak was also American Express, right?
Yes, so American Express here, we were also identifying what was generally a strong stock at the time, trending upwards nicely. What we had here was a very classic falling wedge pattern, which began to break to the upside after the stock had pulled back into the 50-day moving average and then reversed up. And the moment it started to break out to the upper end of that falling wedge pattern, we took the opportunity to go long. We bought 80 CFDs at $100.60. And we were looking for a move up to $104, which essentially would have meant that the price went back to the prior high where that falling wedge pattern began to form. But at this point in time, I actually did decide to run the profit. And I said we would stick it out and we would hang on and we would run a trailing stop loss below the prior day's low each day and essentially ratchet that trailing stop loss up day by day. And what it meant is that the price went all the way up to about $107, and then it started to retrace, and it breached the prior day low. So we got out. We got out at $106.50, which meant that we made $439. So it was quite a nice profit on this trade. And also what it meant is that we were able to extract more out of the trade than what we had initially hoped to. So it was a good trade all around in the sense that we did manage to run that profit. Look, you can see it did continue to go higher ultimately beyond that as well. So we still left money on the table. But nevertheless, I think it was quite a good lesson in how to run a profit on a good trade.
And then finally, and most recently, and a really star performer was Sibanye-Stillwater.
Yes, it was. So this was actually our most profitable, or one of our most profitable stock trades of the year to date. And you can see what I'd identified here was that Sibanye was essentially forming this big rounding bottom or saucer bottom type of pattern into September. And you could see through July, August and September, it was making higher lows and higher highs. The news flow was starting to pick up and get a bit more positive. Also, your 50-day moving average had begun to take on a positive direction at that point in time. And I said that if it pulled back into that upward trend and into that 50-day moving average and then reversed up, we would look to buy. We did. We went long of 6,500 CFDs at R8.89, and it moved up very nicely thereafter. Now, I'd essentially seen an upward sloping channel there, so I thought it was going to get to the 200-day moving average, and that might get stuck there. Alternatively, if it goes a bit higher, we would bank profits at the top of that channel. So we did sell out at R10.70, and we made 11,245 Rand. So it was a very good return. It did continue a bit higher, but not for long. I mean, you can see only about 3 days or 4 days it spent above our exit point. It traded up to about 13 Rand. And then it's actually started to dribble away throughout the rest of the year. In fact, the way I see it right now, I'm sort of almost looking at that and wondering if it's not formed a head and shoulders pattern and it's about to go back down to the prior lows again. So, you know, something I've learned with these kind of shares, these gold shares, platinums and mining shares in general, you need to be quick on the ball and trade that volatility. Don't get stuck and sit around too long. Take your profits and be happy with them. And this is a classic example. You know, I think right now I get the sense there's quite a lot of stale bulls now stuck in the stock that have been buyers over the last 2 months and are underwater now. And that's what I suspect might actually see it heading lower in the months ahead.
Okay, so those were some of our winners. Let's look at some of the losing trades. Not to say that they're losers necessarily, because there's always something we can learn from them. So first up, you've got Woolworths for us.
Yes, that's it. So we'll look at 3 losers here. And I think it's always important to, you actually often learn more from the losing trades than you do from the winning trades, actually. And just because it's a losing trade doesn't mean it was a bad trade. In fact, I consider all of these losing trades to be successful trades because we stuck to the strategy with each of them. So here's Woolworths. Now, this is back in March of this year. So, very different times and outlook, mood to how we are in the country at the moment.
Ramaphoria was all over the place.
Absolutely, Ramaphoria, and we were all super excited and things were going to turn around and it was looking good. And the retail shares actually were doing very well in the first quarter of this year. You could see it with Woolworths here. It had been trending higher. You can see higher lows throughout, and it started to form what at that stage I thought was looking like an ascending triangle pattern. And typically these things break to the upside ordinarily, not in this case though. And based on that, I took a view that I wanted to be long of Woolworths into that last dip to the uptrend. We went long at 64.20 Rand, and used a stop loss below 62.50. Now, as you can see, it didn't make the break to the upside. Instead, it decided it was going to turn to the downside. And we ended up being stopped out of that trade at 61 Rand. It meant that we lost just over 3,000 Rand on the trade, which was not obviously the outcome we wanted, but we always go into a trade knowing that a loss is a possibility, and you always set out to know how much you might potentially lose on a trade. So in this case, we lost that. It wasn't a huge percentage of our capital. It worked out at 2% of our capital, so not a train smash. And I look back at it now and I say, well, thank goodness we were stopped out, because look at what's happened subsequently. I mean, in the months since, Woolworths has dropped down below 50 Rand a share. So having a stop loss here certainly saved us from bigger losses. And the stop loss does two things for you. A, it protects your financial capital, which is important. But the second thing it protects your emotional capital, your confidence. And that's critical. When you lose a small amount of money, that's not the end of the world. It's not going to dent your confidence much. Yeah. If you allow your loss to grow and become a problem, that's when your confidence also takes a hit. So I think, for two reasons, I'm very pleased that we exited this trade, because it allowed us to then get out of a losing trade, not lose too much money, and then still be available to other trades that subsequently came along, which were good trades.
Yeah. So we discussed ShopRite as one of the winners. It's now fallen on our naughty list, so to speak. Yeah. So let's walk through that trade and what happened there.
Yeah, so here it's also back in the beginning part of the year, back in March. Same time we were very bullish and Ramaphoria and all of that, and you can see that the stock at that point in the year was trending higher, and it was actually looking very good technically. There was a beautiful falling wedge pattern there that had formed. It began to break to the upside. And if you gave me this same setup 10 times over, I promise you I'll trade it the same way all 10 times, because most of the time you would expect a falling wedge pattern like that to break to the upside and carry on and go and retest the prior highs. That's what will happen most of the time. Of course, most of the time is not all of the time. Yeah. And in this case, what happened was that we went long on the breakout at 254 Rand per share, but we were stopped out a couple of days later on the move below 248.50. And we lost 2,882 Rand per share on the trade, not the end of the world. And once again, look at what happened subsequently. The Ramaphoria and all the bullishness and whatever, very quickly fizzled out. Yeah. And the share price has been, it's traded down below 200 Rand a share in the months recently. So once again, I'm very pleased that we had a stop loss here. It saved us from bigger losses, and I consider it to be a successful trade, even though we didn't make money on it.
Yeah. Okay, so we're almost out of time, but we can fit one more in, and that's PayPal.
All right, so PayPal is obviously on the offshore market. It was looking pretty strong up until September of this year, and the uptrend was intact. It was above the 50-day moving average, etc. And I took a view that when it pulled back to that uptrend support, it was likely to break higher. In retrospect, the lower highs here should have been a warning for me that it was maybe not starting to run out of momentum, but it's easy in hindsight now. Yeah. We went long of 112 CFDs at $88.50 with a stop loss at 87. I actually closed this trade out before it's triggered the stop loss. So we got out at $87.60. We lost a small amount, $141, not the end of the world. And again, look subsequently, you can see it fell a lot further. So once again, I'm pleased we were stopped out here. We may not have made money on the trade, but I still consider that it was a successful trade because we stuck to the strategy that we had set out in the beginning.
Sticking to that strategy has really paid off for us. So because it's so stellar, let's just take one last look at the portfolio.
All right, so here it is. South Africa, we were up 27% for the year to date locally. Offshore, we were up 11%. When one combines it all back into rands and calculates the exchange rate, it essentially means that we've got 420,000 Rand in the accounts now. That's up 25% for the year to date, and it means we've made a gain of 85,000 Rand for the year to date, and that gain goes towards a charity, an educational trust that I'm involved with, and I'm delighted with this performance this year, and delighted once again to be able to donate something to charity after what has actually been a good year for us, but a very tough year for the market.
Great, we're going to have to see how 2019 plays out for us. Hopefully we can top this performance.
Let's hope so. What do they say? Past performance does not necessarily guarantee future performance, but what I will attempt to guarantee is that the philosophy and the principles that we always follow on this show, we will continue to follow those same principles, because it's worked for us for 9 years of Traders Corner that we've been doing this, and I'm convinced that the process that we follow and the rules and all of that we follow is the way to trade, and ultimately the results speak for themselves.
Definitely a winning formula. Garth, thanks so much for your time.
Thank you.
Garth McKenzie is editor and founder of Traders Corner.